Although most indices have recovered since the markets collapsed in March, the British benchmark index FTSE 100 is still well below its pre-crisis level. Not only is the country struggling with the economic consequences of the corona crisis, it is also in the middle of negotiations on Brexit. The FTSE 100, which is also known colloquially as Footsie, is the UK's leading index and includes the companies with the highest turnover on the London Stock Exchange. Among the values included, the pharmaceutical company AstraZeneca, which is currently researching a vaccine against the coronavirus, currently has the highest market value. Nevertheless, in the midst of the crisis, the leading index has a harder time than its counterparts in Germany, Switzerland or the USA. It had its high of this year on January 17th with 7,674.56 points. In March, it then fell to 4,993.89 points. Up until that point, the FTSE was doing the same as other major markets. Although the index has also recovered after the corona low, its recovery phase was slower and less strong than that of the S&P 500, which is shaped by tech stocks such as Facebook, Apple and Amazon. While this is currently quoted at the level of February, the FTSE is far from its pre-crisis level. It is currently just under 6,000 positions. Companies from the financial sector suffer from a slump in profits. Instead of technology companies that drove the S&P 500 in the US, the FTSE contains largely values from the areas of energy, finance, utilities, and other companies that are suffering from the corona crisis. According to Andrew Wishart of the Capital Economics companies, from the financial sector in particular, are suffering from low interest rates, at Sharecast reported. He believes it's unlikely that bank shares will pick up anytime soon. In the first half of the year, the major bank SHBC suffered a slump in profits worth billions, and this year the share has already slumped by more than 50%. Our development in the first half of the year was adversely affected by the COVID-19 pandemic, falling interest rates, increased geopolitical risk and increased market volatility, said CEO Noel Quinn in August. The securities of the financial service provider Barclays also collapsed by more than 50% this year and are currently still far from their price level from before the crisis. According to the NZZ, Barclays expects that revenues in the entire industry in 2021 could be up to 15% below those of the previous year. Banks would have to reduce their costs and make their way of working more flexible. A wave of layoffs must also be expected. Another large group in the FTSE is made up of companies that are active in the travel and tourism industry. Hardly any other industry has suffered so much from the corona crisis, and travel was not possible at all for weeks due to measures to contain the virus. Even now, travel providers have to reduce their capacity significantly in order to be able to maintain sufficient distances to prevent the transmission of the virus. In addition to the Intercontinental Hotels Group, the International Airlines Group is represented in the index. While the hotel group's share fell by almost 25% this year, the IAG paper has already slumped by almost 85%. Until recently, the index included the low-cost airline EasyJet and the Carnival Cruise Line, two other companies from this group. But in June, these and two other companies had to vacate their positions. Instead, companies like Avast, GVC, HomeServe and Kingfisher followed that were able to benefit from the crisis. TUI had to vacate its place in March. In addition to the index's position, which puts its price development as a disadvantage in the midst of the crisis, the UK defaults are also suffering from the unclear situation regarding further Brexit negotiations. The country is currently in a transition phase in which the country's trade relations with the EU are to be clarified. If there is no agreement by the end of the year, previous arrangements on tariffs and other trade hurdles will no longer apply. Talks between the two parties are currently stalling. Caroline Simmons, Senior Investment Manager at UBS Global Wealth, said sterling could fall to $1.25 if an agreement with the EU is not reached. UK stock prices could plummet 15 to 20% further. Ultimately, we think it is more likely that there will be a deal between the UK and the EU, but a no-deal exit cannot be ruled out, said Simmons, according to Reuters. Accordingly, UBS is pursuing a bullish strategy when it comes to the British standard values. For the next 9 to 12 months, Simmons expects double-digit positive returns, benefiting from a weaker pound. Wishart said, according to Sharecast, that Capital Economics had actually expected better price developments for British stocks than is actually the case. In the meantime, however, it can no longer be assumed that the FTSE 100 will be able to completely catch up again. Therefore, a Capital Economic, the forecast for the leading index, has also been adjusted. The bottom line is that we have revised our FTSE forecast for the end of the year from 7,100 to 6,200 points, and for the end of 2021 from 7,860 to 6,600 points, before the FTSE reaches its pre-crisis level of around 7,500 units at the end of 2022, so Wishart. Although the further course of the FTSE is also dependent on the outcome of the Brexit negotiations, the result could be similar, regardless of whether there is an agreement between the UK and the EU or not. A Brexit deal would tend to increase the pound, which would benefit the FTSE. However, if no agreement is reached, the pound would fall, increasing foreign revenues, which make up 77% of FTSE revenues. For the FTSE, a no deal can lead to a similar result as a Brexit deal, but for different reasons, said Wishart. And if you want to support my channel any further, you can become a member or a patron. Information is in the description. And if you now want to know more about European or global politics, you can either subscribe to my channel or watch the next video YouTube has chosen for you right here in the end screen. I'll see you in my next video. Click and enjoy. Viel Spaß!